Hi folks, this is just a quick video update. It's not going to be all slick and smooth. Reason is because I want to get it out quickly. So let's have a look at where we are. So we saw the dollar index yesterday rally up after Powell's testimony, his ongoing repetitions of prolonged rate hikes and maybe higher rate hikes for longer. The market's pricing in a 50 basis point rate hike coming up in the next FOMC. So we saw the dollar rally and we've broken up above through resistance, which is all pretty bullish for the dollar. We've got the 200-day moving average above us, but we'd like to get up to 107.50, I think, up to this 50% Fibonacci retracement, which would be the 50% of the move from the top down to the bottom. It's a good area always for a strong move, a big correction, move down, big correction back up, and 50% is normally a really good area for a trend to retrace to and then reverse and then carry on in the same direction. So overall, I'm looking to get up to we might get up to 106. I'm hoping at least we'll get to 106. That's where this first 38% Fibonacci level is and the 200-day moving average. But I'd like to get up to 107.50 to exit all long positions on the euro and start all long positions on dollar. Otherwise, in other words, short on the euro and the pound, and then start to sell into that rally, potentially for a move back down to retest these lows at some stage. It's going to get very choppy between 106 and 107. A lot will depend on jobs coming out on Friday, non-farm payrolls. We expect the jobs number to be actually better than expected, so that will just probably add fuel onto this dollar rally, and we'll see the euro and the pound continue to move lower. So 106, you can figure out where we are, 105.60 now. That's just a little bit above us. But if we get to 107.60, that's about 2%, so roughly 250 to 250 pips on the euro and the pound, lower on those. Sorry about my phone going off as well. So that's where we are on that. And then if we can sort of translate that into euro and the pound, so 150 pips down from the pound, take us down into this 104 region, which is where the support level is, also the 50% retracement level, and also the 200-day moving average. So I'm hoping for the euro to move down into around about 103.50, 104. We're going to want to sell the euro again if we get a little retracement opportunity later on today, and we'll be looking to add more short positions to the euro. We did close that for a profit. We closed all of them, and I'd like to sell the pound as well if we get a rally today or tomorrow ahead of the non-farm payrolls number. I'd like to see perhaps we can get the pound up to 1.19 or 1.1920, maybe even just 1.19, 1.1890. Those would be areas in the pound that I'll be looking to sell. And then we want to move in the pound down to the first support level at 1.1650, and then maybe 1.14. So that's what we'll be looking for on the pound. So those will fall in line with the dollar index. And then I think the same is going to happen on CAD pairs with the euro and the pound. And so we've got this beautiful opportunity on CAD. We're short on CAD, as you would have seen. We'll talk about the Aussie dollar yen shortly. We're short on CAD, head and shoulders pattern. CAD likes this. CAD also likes triple tops, tweezer tops, all that sort of thing. We've seen it repeatedly. These sort of tweezer tops, tweezer tops, tweezer tops, tweezer tops, tweezer tops. And often it's also intraday head and shoulders patterns. Now we've got a daily head and shoulders pattern, which looks really good. So we're short on this one. And the first target for this move will be down at 142.40, and then perhaps we can get a little lower on euro CAD. Overall, even though we've been consolidating for best part of this year really so far, still pretty overbought and right up into the supply and demand zone where we are, where these red lines and the green line are. So we probably should get down back to, at least if we're going to make a bullish flag here eventually, I'd like to see a retest to the bottom of that and maybe a triple bottom on euro CAD. Let's see what happens. We're short that one, as you will have seen from the Telegram signals, and then nothing else on this page really. And then if we go to Australian dollar yen, we've just sold this. I don't know why my charts are going weird. Just sold this, and basically we took a good profit on that yesterday. Took a good profit on the euro and on gold actually. Gold is another one I'd be looking to sell into rallies on rather. But we want to sort of look to sell Aussie dollar yen. You've seen my video analysis on this repeatedly on YouTube, so there's no point in repeating it now. But first target is down around about 88, 89, and then 87, and potentially lower as well into the 85, 86 region. So we want to see retracements back to the underside of this trend line. So if you're trading these signals through Telegram, at least you get an idea of my thinking process. Now that we've broken down through all these moving averages, we had a failed attempt to rally through the 100 and the 20-day moving average. We didn't get up to the 200. We broke down through the 50-period moving average and this rising channel trend line at the bottom, and now we'll probably be likely to try and at least retest it to some extent. Maybe we won't get any higher than we are now, but we might get back up to the underside of this line, or that 50-day moving average right there, which is at around 91. It's not far from where we are. We're at 90.80 at the moment. I might actually send this video out to YouTube in general, thinking about it now, because I'm going to cover natural gas. And then Euro Yen, I'm kind of starting to get interested in Euro Yen. Overall, this really needs to come down at some stage. The average range for Euro Yen is normally around 120 to 130 in this region here, and we're right up at 150.45, similar to the dollar yen, which I think eventually will come down too. We're not short that at the moment, but I'd be looking to sell any yen pairs at some stage. Euro Yen might be worth a go at the moment, but I haven't seen any clear signals, and this looks like just a pennant or a triangle, perhaps a bullish one. We might have to get up a little higher, up into the 146 or 147 region to look to sell Euro Yen. And then dollar yen, same sort of thing. We're right up against the 200-day moving average, and we've touched it, broke through it, haven't closed above it though. Please have a look at some of my videos and tweets on dollar yen. I'm not going to repeat all these analyses every single time I do a video, so you'll find a lot of that stuff elsewhere. But overall, I'm looking to start selling this pair into a head and shoulders pattern. There are some tweets and videos. Go and have a look if you're interested. But if you're in my Telegram and you're wondering why we might be selling, well, our resistance areas up above us are up to 140, potentially 142. I don't know. I'm actually hedged short on this trade. It's a complicated hedge, slightly complicated, so I haven't put the signals up in Telegram. It's a tricky one, but basically I'm weighted short, but I've got long trades on as well. So I've got roughly 2/3 short, 1/3 long, if that helps you if you're looking to hedge positions. If you're not in a short position on US dollar yen, you might consider doing something similar. So my idea is to weight it 2/3 to 1/3 short to long. And then as we get up, I can start taking profits on the long hedges and adding shorts. The profits on the long trades will cover the risk on the shorts, or some of the shorts that I'm covering. Slightly complicated process, hedging markets like this. But when you think there's an overall direction, which is almost guaranteed, and I think there is on the yen pairs, that includes dollar yen, Aussie yen, Euro yen, they're all going to go down at some stage, but we don't know exactly when. That's when you can use good hedging strategies. And I think I've actually done a video on my hedging strategy overall on the dollar yen as well. So if you want to start looking at hedging dollar yen and Euro yen, that's good. I'm not hedged on Aussie yen because I think we've got this process underway already. We've already formed a reversal tendency or reversal pattern on Aussie yen, and I think we're on our way with that. But these ones here, worth looking at. I'm hedged here 2/3, 1/3. This one, I'm looking at taking a short position, which will come up in signals in the Telegram channel as time goes on. And gold, again, I've put some videos up on this and tweets on that. I think my target on gold remains at 1780, 1790, maybe lower. We had a beautiful move, took an excellent profit yesterday on gold, and I think that's going to continue lower. We don't want to form a double bottom here, though, at the 100-period moving average and that level. Gold tends to like double and triple bottoms, as you will have seen from last year. Triple bottom there, and we often see double tops, double bottoms, and that sort of thing on gold. So we don't want to see a double bottom here, but that move down is pretty bearish, pretty strong, pretty severe, pretty full of intent. And I think we're going to get lower. So we want to be selling up into perhaps 1830, 1825, 1830, and potentially even up as high as 1840. We don't want to get much more than halfway up through this candle. That's really important. So if we do get a retracement halfway up this candle, would take us to around about 1825 to 1830. That'd be a place I'll be looking to sell gold on the next move up if we can get one. Otherwise, it's just probably going to carry on going without us, but doesn't matter. We took a really good profit on that. Same with silver. I'm not going to go into that. Silver looks a bit more bearish, actually. Gold dropped 2%. Silver dropped something like close to 4% yesterday. So silver looking really weak. So my target for silver was 20, and we're just about there already. So I really don't know what silver's going to do at this point. I'd rather stick with gold, which looks a bit more timid, docile, tamed, and manageable. Silver perhaps getting a little bit freaky and out of control. I don't know, but let's focus on gold. And then when it comes to S&P and NASDAQ, and I saw the Dow Jones dropped a lot yesterday because of Jerome Powell's focus on inflation in goods coming down, but not services, and The move from spending on goods over COVID to services recently, and the goods market or the manufacturing market took a knock. Not as bad in the case of the NASDAQ and the S&P. Actually, the NASDAQ wasn't bad at all. People were saying the markets crashed. Well, it dropped by, I don't know, 1% or something. S&P dropped by a bit more, about 1.5%, I think. But down to this trend line, so I really don't know. NFP on Friday again. I think the stock markets are just tricky at the moment until we see an overall direction and something developing. And there is all sorts of banter and chat and back and forth on stock markets and opinions like you can't believe. And people long, people short. I think there's so much interest in the market because it's confused. And so are the economic signals. We've got perhaps recession looming, we've got housing market potential collapse, but we've got strong jobs and we've got strong retail sales and we've got strong services industries. And at the same time, people are thinking the market's going to crash. There's a thinking that we're in for a big rally, and actually there's a lot of confusion and there's big interest. And when I say interest, I mean there are big positions, big orders, big money committed on both sides. I think if this gets to be a stalemate, eventually people are going to move into bonds. Bond yields have just rocketed up since yesterday and are generally on the increase, and it's going to be much safer for a lot of people just to put their money in bonds, and that will pour money into essentially the US dollar, which also adds fuel to the idea that the dollar will rally, especially if the Fed increases more aggressively by 0.5%, whereas the European and other countries, Canada, etc., are likely to, and Australia and New Zealand, are likely to lag behind that in terms of the aggressive approach to raising rates. Jerome Powell seems quite intent, and the verbiage that we heard seems pretty bent on perhaps a bit of a jolt with a 50 basis point increase, but also a prolonged period of increases and certainly no reductions in the interest rate. Now, we've talked about soya and sugar. I'm not going to talk about those today, but I do want to talk about natural gas. And for those who are all rushing into the bullish side of natural gas, I don't think that we've got anything to celebrate just yet. Yes, yesterday was slightly bullish. We had a bounce off that 20-day moving average. We closed above this horizontal red line, which is actually a really good sign. Now, you know that I'm biased long. I've got a long position, but I'm also hedged slightly short on this position. I was considering adding more short to this hedge. If we had a close beneath this line, you will have seen in yesterday's video, that's exactly what I said, but we didn't close beneath that line. So we're still holding up there. So for now, the bullish side remains on, and the target is back at $3, where this 50-day moving average and this horizontal line, the top, that flat tower top from, when was it now? 1, 2, 3, 4 days ago, is the resistance level. That's obviously the level to look out for. If we get through there, we've still got the 3.3 to 3.7-ish area to look forward to, and that's where many people, as I said often before, there are a lot of people that took long positions here, a lot of funds, a lot of private retail traders, a lot of people that are on the supply and manufacturing side are looking for that level as well, because we really want to get above the $3 level, roughly speaking, slightly below that, but the $3 level, roughly speaking, for these businesses to be profitable. So this is an area of incredible interest, and simply because of all of those factors, I think we're going to get up there, but I'm not sure if we're going to stay up there for too long. If we get up there before we're moving down, I'm not convinced either way just yet. It's very possible that this little bullish sort of candle, it's not convincing. Yeah, a bit of a wick, but bullish body held above resistance, support and resist. Well, became resistance after dropping down, bounced off the 20-day moving average. All pretty good signs, but you know, it's just one day. Look, if you look back over time, just give you an example, looking to the left here, up, down, up, down, up, down, up, down. All of these days showed bullish intent. There was a couple of bullish engulfing candles, a couple of bearish engulfing candles, all little candles, roughly the same size as that candle we had yesterday. In the end, none of them meant anything because the market was moving lower. And we saw the same over here as well, up and down, all sorts of bullish signs, but especially over here. But eventually the market moved down, and the same thing we're seeing here. This could just be another ledge in fact the same ledge, but on another occasion, that is forming around this sort of pattern. We might have to see another leg lower. I don't know. I'm still long but hedged short as well. I've got an idea to add to the short side of my hedge if we close beneath here, particularly below the 20-day moving average. Then I'll be looking to see what happens if we get down to 233, the next really key support level. If that fails, we've got $2. Remember, we're right in the middle of this range right now. So this is not a place to be placing massive bets. We're literally dead center of this range. That's the top, that's the bottom. We couldn't be more central than we are at the moment. Definitely not a time or a place to be betting big on natural gas. You should never be betting big on natural gas. Never bet more than you can lose. Never put everything in one basket with natural gas. We can get dramatic, huge moves, 10, 15% a day. Yes, it's enticing because you think you can make a lot of money, but equally there are plenty of blown trading accounts along the way that have thought that natural gas was a way to quick wealth. It's not. It's just like any other instrument. Trade it carefully, trade it precisely, trade it with respect, and trade it with great risk management techniques in place. So that's natural gas, and I think that's it really for now. As always, if you found this content useful, please subscribe to the channel and like this video. There's a little button on the home page of this channel. That's over there. I've already subscribed to my own channel, but press there, and there's a notification bell. If you press that, you'll get notifications whenever I produce new videos.